material prices, it would be a bit premature to comment if things have normalized on that front. The situation is fairly dynamic with extreme moves in either directions. It is better to observe them before commenting on a definitive trend. On a long-term basis, though, we remain positive on the business and believe greater government allocation to infrastructure and to low-cost housing projects would provide the requisite fillip to demand growth, both urban and rural. Moving on to Sagar specific developments, we are pleased with our volume growth during the quarter, which has seen an improvement both sequentially as well as annually. Realizations have further improved compared to the exit prices of the quarter, largely necessitated by unrelenting increase in fuel prices. Demand sentiment as well is fairly buoyant, helping sustain the price revision. Another noteworthy development was the investment by Premji Invest to help meet the organic and inorganic aspirations of the company. We will jointly work with Premji Invest towards setting up best-in-class governance process in our endeavor to drive the value creation to all our stakeholders. We are also pleased to announce that we have been awarded the Best Management Award by the Government of Telangana for its Mattampally unit, and our Gudipadu unit was awarded the state level and zonal level overall second prize for the Mine Safety 2022. In appreciation of the safety and other works pertaining to the mines by the Mine Safety Association of Karnataka under the aegis of Director General of Mine Safety, Government of India. On cost rationalization measures and better inventory management helped us partly control the pressures of the input prices. As indicated earlier, we have increased the usage of domestic coal and lowered our consumption of petcoke during the quarter, which has helped us lower on our operational cost. Going ahead, we believe commissioning of our new units, coupled with strong balance sheet, following the preferential allotment, position us well to deliver the steady and consistent growth. With that, let me now move on to our quarterly performance. We reported revenues worth rupees 502 crores during the quarter, driven largely by volumes. Overall contribution from the two units commissioned during the year stood at 77,836 tons. EBITDA for the quarter stood at rupees 61 crores as against rupees 104 generated during Q4FY21, while margins for the current period stood at 12% as against 25% reported during the corresponding period last year. As mentioned earlier, we also had to operate in the rising input price environment, owing to which we registered a margin compression, and also due to the startup costs that have been incurred at both the new capacities. The overall impact on the profitability would have been even more severe, but for our prudent procurement and cost rationalization strategy. We have been working towards increasing the share of domestic coal to better manage the power and fuel expenditure. Higher depreciation and interest expenses result in the loss for the quarter of rupees 19 crore as against a rupees 44 crore profit generated during Q4 FY21. This is also due to the borrowings that we have done for a potential acquisition. Average fuel cost stood at rupees 1,596 per ton as against rupees 870 per ton during Q4 FY21. Elevated prices of coal and petcoke resulted in higher per ton cost of fuel for the quarter. Freight cost for the quarter stood at rupees 776 as against rupees 742 per ton during Q4 FY21. From an operational standpoint, Mattampally plant operated at 66% utilization level, while Gudipadu, Bayyavaram, Jeerabad and Jajpur plants operated at 83, 72, 30 and 9% respectively during the quarter. On an annual base, net revenue for the operations for the year stood at rupees 1,597 crores as against rupees 1,371 crore generated during the last year, increased by 16% year on year. EBITDA for the year stood at rupees 276 crore as against rupees 400 crores reported during FY21, declined by almost 31% year on year. Profit before tax for the year stood at rupees 104 crores as against rupees 281 crores reported during FY21. Profit after tax for the year stood at rupees 59 crore as against a PAT of rupees 186 crore reported during the FY21. As far as the key balance sheet items are concerned, The gross debt as on 31st of March 2022 stood at rupees 1,503 crore, out of which rupees 1,324 crore as a long-term debt, and the remaining constitutes working capital. And out of this, around 500 crores has been borrowed for a potential acquisition. Net worth of the company on a consolidated basis as on 31st of March 2022 stood at rupees 1,309 crore. Debt equity ratio stands at 1.01:1. Cash and bank balances were at 163 crore as on 31st of March 2022. The Board of Directors has recommended a dividend of rupees 70 paise per equity share of rupees 2, which is 35% on 13 crore 7,07,548 equity shares of the company, translating to a dividend payout of rupees around 9 crore. That concludes my opening remarks. We would now be glad to take any questions that you may have. Thank you again.
Thank you. We will now begin the Q&A session. A reminder to all participants, you can ask your question by raise of hands in the participant tab of the Zoom platform. We will wait for a moment for the question queue. The first question is from Shravan Shah. Please go ahead, Shravan.
Thank you. Sir, am I audible?
Yes, sir, you are.
Yeah. Sir, first, coming on the pricing front. So, if you can help us in terms of the fourth quarter in the East and South, how much the pricing that we have done, and post March in April and May, how much prices we have raised, because in South, my understanding says the price increase is relatively lower versus other parts of India. So just wanted your thought on that.
Yeah, good morning, Mr. Shepherd. See, our observation in the southern markets, especially the Hyderabad market, it has been flat from March to April. May, there is a slight change, but we are still in the early part of May. But from exit price of December to March, there has been an increase of around 15 rupees per bag. From March to April, they more or less remained flat. Bangalore, from December, which was at 365, to March, it actually increased by 5 rupees. And from March to April, it increased by 10 rupees. Chennai December was at 380. It slowly remained flat at 380, and more or less it is flat for the even April month. Our specific markets of East, which includes Berhampur as well as to certain extent Bhubaneswar, the March price was around 300 rupees in Berhampur and 310 for Bhubaneswar. They increased to the April month from 300 to 320 in Berhampur. In Bhubaneswar, from 310 to 330 rupees. Indore, we have seen December prices at 330, which increased to March by 10 rupees to 340. And from 340, they moved to 370 for the March month. Sir. This is our reading of the markets.
Are you feeling any pressure, or what's the main reason do you see in terms of the prices not moving much in South? Any thought on that, and do you see that the remaining months of this quarter, May and June, can we see, because the cost pressure, everybody knows the cost pressure, so what is stopping in terms of the prices to go up?
See, I think the demand has been okay, but it has been lackluster, sir. It has been highly fluctuating. I think that could be one of the reasons why the price did not follow the input price in terms of the curve. Yeah, that's what we strongly think. Our internal view, again, it's very specific to our internal view, is that it might continue similar for this quarter, maybe into the next quarter before it actually starts rising. To follow the input prices is what we strongly believe.
Okay, sir. Now coming to the question in terms of the demand and under the costing per. So demand. So if you can once again help us in terms of last time what we guided in terms of the both the new plants utilization, how we are expecting for full year, and broadly in terms of what kind of a volume growth that we are targeting for this year. So that is one aspect. And second, in terms of the costing, I understand it is very difficult. The kind of fluctuation is happening in the coal prices, but whatever is till now inventory we have, how do we see particularly the at least this quarter in terms of the costing, how much we can expect it to go further up?
Yeah. Now let me address the first question first in terms of our demand outlook. Our demand outlook is to do 5 million for the current year. This is primarily because we are expecting a flat to slightly positive kind of a tick for the existing markets, and with both the new plants reasonably ramping up, should be significantly contributing to this 5 million. Sir, out of 1.4 million incremental demand, we expect sizable volumes to come from both these plants, that is Jeerabad as well as Jajpur, and more specifically from Jeerabad and to a lesser extent into Jajpur, because in the first half we expect Jajpur to slowly ramp up, and only during the second half we expect Jajpur to fully catch up. All in all, we are expecting a 5 million ton consolidated kind of a volume outlook is what we have for the current year. Now going to the input prices, sir, as you rightly mentioned, it is difficult for us to predict anything. But with the current inventories that we have, in the past we used to maintain a 6-month inventory that got reduced to 4.5 months now. So we do have inventory of fuel. The only thing that we are not in control at this point of time is both the inward and the outward freight, sir. That is exactly what we are not in a situation to predict. Overall, we are expecting the cost to move up anywhere between 2 to 3% from the last quarter to this quarter, primarily on account of freight both inward and outward. Coming to the coal landed cost, as I mentioned, yeah, we are reasonably secure for this quarter and halfway through the next quarter. So we are not expecting a significant jump. But for the domestic petcoke pricing, which has been in tandem with the imported petcoke, we do use close to 30% of petcoke. That might have some influence, but domestic coal, yeah, we are reasonably sure that availability and cost related, yeah, we look to be in control for at least this quarter and halfway through the next quarter.
Sir, my last question is on the finance cost and the debt. So the finance cost this quarter has significantly went up. So it is a 47 odd crore. So will this run rate continue or will it decline? And in terms of the debt, I understand that you mentioned the 500 crore is for acquisition. So anything you want to give a highlight? Would it be a organic, inorganic, or anything? Have we moved on the inorganic part, or can we materialize, or can we expect some announcement at least in next 1 or 2 quarters? And ultimately, how do we see the dates by end of FY23?
We did narrate that our net debt would not exceed more than 800 crores to 850 crores. So that remains, sir. But for this 500 crore debt, which we have taken for an acquisition, as I mentioned, it's an acquisition. So organic is ruled out. We are definitely chasing a couple of things. And we are more than hopeful that it would get translated either at the end of Q2 to early part of Q3, sir.
And regarding the finance cost?
See, I think finance cost, as I mentioned to you, sir, I think we are in control of it. The only reason why it surged is because of this incremental 500 crore, which has been borrowed for the acquisition. That added up to a normal kind of less than 800 crores kind of this thing. We don't expect a major shift in the real debt for the operation. The only debt that we are servicing at this point of time incrementally is for the acquisition, sir. Once it gets materialized, I'm sure that also should get moderated to a great extent.
Okay, thank you and all the best, sir.
Thank you.
Thank you. Anyone who has a question may please indicate by raise of hands. Dhiral, can you please go ahead with your question?
Yeah, good morning, sir. Sir, any reason for expecting a flat growth in the existing core region?
Yeah, Mr. Dhiral, can you speak clearly? Sorry, I missed on your question.
Sir, any reason for expecting a flat growth in our core regions?
So his question is, any reason for expecting a flat growth in your core region?
Yeah, the expectation is that there is some amount of new capacities that are likely to come up. So given that scenario, we believe that whenever market is very tough, the incremental demand, which we are expecting around AP and Telangana to grow at 5%, to be attributed to the new capacities rather than we getting it. Same would be the case with the existing markets that we operate, both Tamil Nadu, Karnataka, Maharashtra. We do expect whatever is the incremental growth is likely to go to the new capacities rather than to an existing one, sir. So we have always been a market player, so we believe that would definitely be taken by the new capacities rather than coming to us.
Sir, how much capacity is coming up here that we are talking about?
Mr. Dhiral, I'm sorry, your voice is very feeble, sir. Can you repeat the question, please?
Sir, how much new capacities are coming up in our core region, as you talked about, AP, Telangana?
See, I think over next 1.5 to 2 years, we are expecting somewhere around 9 million in these two states. We are expecting 9 million in these two states and another close to 10 million in Odisha.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from Babu. Please go ahead, Madhu.
Yeah, hi sir. So just because of the overall inflation and now there's a rate hike also. So do you see that individual home building spend coming down? And second is, how is the spend in AP government, which is obviously facing some challenges in terms of the overall?
Yeah. See, I think with the inflationary kind of trends, what we have seen is the knee-jerk reaction is to slow down. But even in the past, our experience has been that it's only momentary. Once the inflationary price trend gets set into the mindset of most of the people, we believe the trends to come back. So a small difference is always a possibility, but that could be for a very, very short period, sir. Yeah, this time the inflation impact is quite sharp. If you see not only the steel, but all the other building materials, they have literally doubled over last 3 quarters to 4 quarters. So since the impact is very, very severe, we do expect some amount of slowdown, but it could be momentarily. Once people get adjusted that this inflation is not going to tame down anytime soon, we expect the housing construction to recover and recovery to be very sharp once the reconciliation happens or the inflationary pressures come down.
And just on the government spending on the AP
I think
side.
the government spend, our experience is that typically post March it trends to slow down, but that has not been the case in the current state of affairs. For first 15 days there were no orders, sir, from the government, but for last few days, at least close to 20 days that we have seen, there has been surge of orders from Andhra government. So we expect Andhra government to be very, very aggressive in their spends because it is part of their election commitments. And even in the past, we have seen whenever any of the governments gear up for the elections, which is 2 years. So I think the clock started now. So we do expect most of the state governments, which would be going for election over next 2 years, to accelerate the spend. So that is the trend that we have seen even now.
Okay, sir. Thanks.
Thank you, Rajesh. You may please go ahead with your question.
Yeah. Hi, sir. Am I audible?
Yes, Mr. Ravi. Yeah.
Hi, sir. Good morning. My question pertains to the interest cost on the debt which is borrowed for the acquisition. And is there any time period, any lock-in period for the same?
Yeah, it's borrowed by from three institutions, sir. Yeah, there is a definitive kind of lock-in period ranging anywhere between 18 months to 2 years. Mr. Rajesh.
And what is the interest rate?
Yeah, the average cost is around 12%, sir.
How much? 12%.
Yes, sir.
Okay. Okay. And how about the other borrowings that you have on books?
The average is at around 8%, sir.
Okay. So the blended would be close to 10% for you. And this quarter, as in the June quarter, the realizations you are mentioning are broadly flattish versus March quarter. While the industry is well aware there is a sharp spike in the cost pressure. So what would that would obviously be evident that March quarter has been a relatively weak one in terms of the margins. So are we staring at further sharp fall in margins for most of the South-based players, given that the pricing doesn't seem to inch up? April has been a washout.
Yeah, Mr. Rajesh, this I will speak for myself. That's easier. So our experience is that March quarter, as you have seen, there was a lot of pressure on the both input as well as the realization.
Right.
In our case, very specifically, we had an issue because we were starting up two new plants. So as you know, the startup costs usually tend to be higher, and the operating capacity utilization of both the plants were relatively lower. So that did put pressure on our margin. If you exclude that, we would have been a lot better, and we are a lot better. And getting into the Q1, sir, the ramp up from these two actually is helping us. In our case, it's too soon, but we have seen that though the realizations moved only to a certain extent, not to cover the major cost, but there has been a significant improvement in our EBITDA per ton kind of numbers, sir. It's purely because the startup costs and everything have been done. And at the same time, the operational utilizations have also gone up for those two plants. With that, we have seen our EBITDA moving up, EBITDA per ton moving up significantly.
Okay, this is heartening to know, sir. But could you quantify how much would have been the impact of the startup cost of the two plants in the March quarter numbers?
Yeah, both are relatively sizes are very different, but all in all, it could be around anywhere between rupees 100 to 150 rupees per ton could have impact on a consolidated.
On a total basis, okay. So this 540 would be close to 700 for you.
Yeah, it should be slightly higher than that. Yeah, it should be the case.
Okay, so even taking that 700 as a base and realization improvement has been more or less flattish, and cost for sure would be going up by at least 30 rupees. On an average for the 30 rupees a bag means 500 to 600 rupees per ton. So how do you see to counter that? Even factoring that in, is your margins expanding or you are benefiting from low cost inventories?
Yeah, Rajesh, it is not 30 rupees from quarter to quarter, sir. I think the overall costs have gone up year on year. It is almost around 40 to 50 rupees, but there was a set off in the realization uptick. So what we expect is that the realizations only moved up by, say, not even 10% of the cost input price as a percentage basis points. But volumes did help us to cover some amount of cost pressures. The margin compression, we are expecting not as severe as it went by, but unless prices move up, it's likely that we still could be under some pressure as far as margin is concerned going forward, unless there is a pass through of these prices from the ground. Quantifying them is too soon. I think we would be very happy to come back to you by end of this quarter exactly how the trend lines are. I think it is too soon for us to really quantify the real impacts for the current year.
Okay. Great, sir. Thank you. All the best. We'll come back in queue.
Thank you. Mangesh, you may please go ahead with your question.
Yeah, hello, sir. Good morning. Sir, my question is regarding the fuel cost. So in the presentation that you have mentioned, the domestic coal now constitutes almost 40% of the total. I just wanted to know where we can see it going forward. How much would that increase to? And secondly, sir, on the petcoke side, so we have mentioned that the current price of that pet coke is almost double of that of what we have actually realized in 4Q. So when do you expect that to hit our cost structure? Is it in 1Q itself or in 2Q?
Sir, we generally do on an average kind of a costing. So there is nothing new that you should expect except for any further increase that is likely to happen. We have been consistently narrating about 60% to 70% to be the domestic coal. Since the Jeerabad plant also has come up, where we are sourcing the domestic pet coke, the percentage there is a small shift. But for that, we started switching both Mattampally as well as Gudipadu plant. It is almost 60 to 70% domestic coal, and 30 to 40% would be the domestic pet coke. And we are using 95% domestic pet coke at Jeerabad, sir. And these are the costs which we have seen, which is on an average basis, sir. We don't try to keep low cost in terms of booking. Yeah, we do it on an average inventory cost level. So it may not alter the equation quite soon. It's a continuous kind of a process, sir. So there is nothing new that is expected on the cost side other than what we have already seen. But for the freight, sir. But for the freight. So whatever is the incremental freight cost that would keep coming, that would be an addition to the overall kind of a cost.
And sir, another question I had on the markets that you operate in. So if you can highlight, what kind of demand was there in FY22 and how much growth do you expect in FY23 if it's possible?
See, our reading of the market is last year AP Telangana grew by almost 7%, sir. So we are also expecting a 5% growth for the current year. Tamil Nadu has grown by 25%. Yeah, these numbers look high because of the base was very low. We are expecting a 5% growth in this market, sir. Karnataka grew by 20% last year. So we are again expecting a 5% growth. Maharashtra grew by 15%. We are expecting a 7% growth. Odisha was flat for last year, but we do expect a 10% growth for the current year. MP grew by 20%. We are expecting a 5 to 10% growth for MP for the current year, sir. And these numbers take back all the states' demands by 2 to 3 years back, sir. So these are not new numbers. With the growth numbers that I'm trying to project, it's going back to the pre-COVID kind of levels, sir. This is not new. And some of the states slowly start preparing for their election. Some states aggressively spend 2 years before the election. So that also has been considered for this outlook. But the outlook has a small caveat. The inflationary pressures we believe to remain similar. Any upsurge could impact these demand outlook projections, Mr. Mangesh.
Thank you, Mangesh. We may take the next question from Dipen Sheth. Please go ahead.
Yeah, can you hear me now?
Yes, sir.
Yeah, so I was just wondering if I'm making a mistake in something I might have heard earlier. You're shooting for what kind of volumes in this financial year?
5 million, sir.
And you've done what about, so that's about 50 lakh tons versus the 36 odd that you've done in the FY22?
Yes, sir. Yes, sir.
Okay. Okay. And you're going to do this at a time when costs have skyrocketed and the demand outlook is lukewarm. It's not ready for.
From some 80,000 tons that we have done from these two ramped up assets, or the new assets, we are expecting a 1.4 million tons. So we are not trying to squeeze any new volumes into the existing markets, and nor we are trying to disturb any of them. At the best, we would be displacing some of those material which was coming from far off into the markets.
Okay, so maybe you do well there. And the other thing on your balance sheet structure, so you've raised money at 12% for acquisition.
Yes, sir.
300 odd crores.
500 crores, sir.
500 odd crores. And you're sitting on the cash right now.
Yes, sir.
You raised this sometime in November, right?
December, sir.
December. Okay. Okay. So this is what shows up as investments on your consolidated balance sheet, about 300 odd crores.
Yes, sir.
Some of this and the cash and all of that. And you funded this at 12%. And I'm sure you're not getting a 12% yield on whatever investing you're doing right now. So
it's
your
an acquisition, sir. It's an acquisition. So right now we obviously would not get the yields proportion to 12. Yeah, this is right now the parking is happening at a very, very low kind of yields. This is very strategic investment. So the yields are not likely to happen. It's more at acquisition that we expect the yields to happen.
No. So
we are not doing any treasury. We are not doing any treasury management at this point of time.
No, I'm okay with that, sir. The question I'm asking is that it's okay that the acquisition might be very lucrative, and for a short while you will get low yields on your deployment.
Correct.
But in that case, I would hope that the deal is pretty much sealed. I'm not sure. I'm not very familiar with the company, but I'm not sure if there is a public announcement to that effect. And even if you haven't made such an announcement, can I take it as a given that it's in the pipe?
It is definitely in pipeline, sir. In fact, we have two choices. I would not say if they would have firmed up, obviously would have come back to the market to announce.
Right.
Yeah, the possibility of these deals happening is very, very likely, sir.
And again, I don't want to sound nasty here, but to acquire these assets with money borrowed at 12% makes sense to us.
Yeah, it made sense to us, sir. Historically, we have never made the wrong judgment on our acquisitions, Mr. Deepak. So,
okay. And just one bookkeeping question on the balance sheet. On the asset side, on the consolidated balance sheet, the last items for both non-current assets and current assets have increased materially over the year. So if you look at under non-current item I, other non-current assets at 135 crores, and under current assets, item C, other current assets at 217 crores, which is more than doubled. So can you just share some color on what these items might cover?
Yeah, 1 minute, sir. Yeah, Mr. Deepan, can we revert to you with detailed explanation on this offline, if it is okay with you?
Sure. I'll put my email ID and telephone number in the chat box. Thanks very much.
Thank you, sir. Thank you.
Thank you. The next question is from Sanjay Nandi. Please go ahead.
Yeah, good morning, sir.
Good morning.
Yeah. So just to mention, like there happened a cost escalation of rupees 40 to 50 per bag on a YOY basis. Am I right, sir?
Yes, sir.
So can you just quantify like what is the escalation that happened on a QOQ basis, like from the exit of March quarter in terms of cost per bag, so that we can just measure it out, like what kind of price hike we have taken?
Mr. Sanjay, we have not done for the per bag, but we would revert to you. We would be happy to share that number.
Okay. And the second question is like that, sir, we have just thinking of doing some acquisitions. Can you just quantify the number, like what kind of size we are thinking of, or it's there in our mind?
Kindly bear with us. We are not very far. I think by either end of Q2 or early part of Q3, we'll be very happy to share all the details with you, Mr.
Sanjay. Okay. Thank you so much. Wish you all the very best, sir. That's from my side, sir.
Thank you. The next question is from Madhu Babu. Please go ahead, Madhu.
Yeah, sir, just one question. So the peak season is like passing without a good tailwind for us because price hikes are not up to the mark. And again, from maybe June, July, monsoon will start. So, so how do you see overall pricing, sir? Is it still possible to raise pricing even if monsoon comes and all? Because the first half has not been that good.
Historically, there has never been a correlation between price to demand to the season. But we do think the first half probably still could be a challenging kind of a thing for us to do anything. Because we are halfway through Q1, which is supposed to be one of the best quarters. So we are halfway through. So price increase happened, but not to a stage and scale that industry was looking for, or for the pass through to happen. So we are still left with another month and a half in the current quarter, and probably a month of good this thing even into the Q2. I'm hopeful but still the outlook that we internally have factored is that it could be a flattish kind of half. First half without any major kind of changes is what we are looking at. From here on, any increase probably potentially could be passed through. Recovery could take some time.
But you're hopeful that even in monsoon time price hike can happen. I mean, like maybe July. No?
We have seen that it has no correlation in the past. So there were times when in the monsoon season prices actually moved up because volume was shrinking. So we have seen in the past. So nothing can be ruled out on that particular front.
And another thing, sir, that acquisition target. So has the valuation expectation moderated for the target entity because of the current
So
situation?
it doesn't change on the short term, sir. It doesn't change on the short term. It's too soon. There are two targets that we are looking at it. It helps when the market is under pressure, but it may not significantly alter the valuation if the valuation itself is very low. Sir.
Okay, sir. Thanks.
Thank you. Shantanu, could you please go ahead with your question? Shantanu, you may please unmute your line and go ahead with your question. Your line is not audible, Shantanu. Maybe request Shravan Shah to go ahead with his question.
Sir, trade share, what was the number for fourth quarter?
You're looking at the trade non-trade shares or what is
Yeah. Trade non-trade share.
See, typically we have always been around 65 to 70% trade, sir. Non-trade keeps expanding based on the government demand. So Q4 we were close to around 65% trade.
Okay. And then, sir, blending this quarter has came down from 50% to 46 odd percent. So now with both the new plants,
Our outlook for the current year on the blending is 60% blended and 40% OPC, sir. I think this is purely possible because of the ramp up of the new capacities. And these two new capacities are in the markets where the demand cement, blended cement is in higher.
Okay. And just to, I understand our capex definitely would be much lower for this year, but just trying to get a number, any number you want to throw.
Around 30 crores is the operational capex that we have kept for the current year, sir.
Okay. And sir, we were previously thinking in terms of the WHRS at Gudipadu, but we haven't decided as
it takes time, sir. It is work in progress, so it is definitely not due for the current year. If any changes would happen, we would be very happy to.
Okay. And sir, currently, or maybe the fourth quarter and currently in terms of the gap between trade and non-trade price would be how much?
So that I cannot comment for the market. In our case, the gap is very, very small. So we generally don't chase the non-trade orders as aggressively. So for us, the gap between trade and non-trade is very, very limited. It is internally the.
Okay. And sir, broadly, whatever the diesel price hike which has happened, and you were also mentioning that inward outward freight. So how do we see the it would be inching up on per ton basis for this quarter? Can it be 5%?
I wish I could give an answer in a very straight fashion. We are clueless, sir, because that's one which has been going on forever. Yeah, just to give you an update, the diesel price alone moved. It moved by 30% from whole of last year. Yeah, it has moved by almost 10% from March to April, and from April to May we are yet to track, sir. So it's something which is a challenging kind of an input number. We would be very happy to share offline on the impact of diesel on a per bag, what has happened in the past, the influence of diesel on the overall kind of cost. cost.
But broadly, whatever the price hike which has diesel price hike which has happened in last 1 to 2 months have entirely been passed on.
No, see, cost as a
no, sir, I am not trying to understand in terms of the realization. I'm trying to understand in terms of the passing on to the freight operator through which we
the
use.
freight operator would not operate it at loss, sir. It's probably at the best he will take it for a month, but after that you need to come back and update him. In our case, the service providers generally it's an agreement, so it's a cost plus kind of a function, sir. So that gets passed on fairly quickly. They don't take any load on that.
Okay. That's it from my side. Thank you.
Thank you. This question is from Mr. Shantanu Kundu. The question is about raw material cost reduction in Q4. What are
it is very simple. The blending so the matching.
Okay. Thank you, sir. Anyone who has a question may indicate by raise of hands. Sir, a couple of questions from my side. Firstly, on the ramp up of Sadhguru, how are things moving there in terms of placement, in terms of how are we placed in terms of category?
We don't believe in category. So it would be a challenge for us to say that. The positioning is very firm. So we did not digest on what it is, but not the that actually helped us position well. More than hopeful by the end of this year. But the full year we might be very close to 8%.
And the same for the Odisha plant?
No, you will be very happy by the end of this quarter. We should be in a better position perspective. We are not new to the market, sir. We have always been a strong B player there, so we remain there. Some of the markets which we are servicing from with a higher lead distance, actually we are saving on that.
Sure, sir. And my second question was on tie-up of coal. So you mentioned you have 4.5 months of inventory. I mean, in
say only gets locked in with the quantities of around 6 lakh tons from Singapore. So there is no issue. The next couple of months it could be a challenge to get it at this point of time. But for that, we are good, even though there could be some delays in the deliveries, but we do have inventory on ground. But the commitment is literally at 70% at a console level. We have the full commitment.
So, sir, does that mean that with the peak power demand going down over, starting June, July, we might see those?
Yes, sir. Once the supply restores, sir, we are more than hopeful, and we will be going back to the 6 months kind of an inventory where the control on the coal price can be at least predicted at least for 1 to 2 quarters firmly going forward, sir. Once this peak season is down, because we believe that it should be on the ground for us to have a control. So right now we are only sitting on 4.5 months kind of. Once this but to go back by the monsoon time for us.
Anyone who has a question?
Sir, lastly on the in terms of how they will help us in terms of overall performance or anything, whatever you.
I think this exercise and all that we are doing would get enhanced. Very specific to business in terms of we will increase this or that, but for sure on the we strongly think that their contribution from their inputs and everything would be of a phenomenal value for us.
Thank you, sir. That was the last question. If you have any closing comments.
Thank each one of you for joining on this call. I hope you got all the answers. Sagar or its CPR. Should you need any, we would be more than happy to discuss them with you. Yeah, we would definitely and have a good day. Thank you.
Thank you. You may now disconnect.
Thank you, Manish.
Thank you, sir.